Yeah, today we are going to discuss about the recovery of tax, penalties, and prosecution. Penalties or prosecutions and appeals. In this topic, we are going to cover recovery of tax and the mode of recovery of tax, refund of tax, tax clearance certificate, double taxation relief, and if anything there, how do you appeal, appellate hierarchy? What is the hierarchy that you appeal whenever you have any grievances? And revision by the commissioner, revision by the commissioner of income tax, appeal to appellate tribunal, appeal to high court. Supreme Court means when do you go to the high court, when do you approach Supreme Court, and difference between tax and penalty, procedures for imposing penalties, defaults and penalties, offences and prosecutions. We are going to discuss today. So whenever an assessee fails to pay tax as per provisions of Income Tax Act 1961, it will be called as assessee in default. And collection of the tax, the primary duty or prime duty of tax collection officer. If he fails in his duty after taking prior permission from commissioner or deputy commissioner, he can take necessary action against assessee who is in default to recover the tax amount. So recovery of tax, if we just look at here, before the completion of regular assessment, tax is collected by way of advance payment of tax and deduction of tax. It's that source. And after completion, the regular assessment, if any tax, interest, or penalty, or fine, etc., is found payable by the assessee, the assessing officer is required to serve upon the assessee by giving a notice of demand under section 156 in the prescribed form or specifying the sums payable, and the assessee should pay the amount by the assessee, and the assessing officer is required to serve upon the assessee. There is a notice of demand under section 156 in the prescribed form will be given specifying the sums payable, and the assessee should pay the amount as demanded under the notice of demand in due time in order to escape penalties and prosecutions. So what are the different modes of recovery of tax? So there are different modes of recovery of tax under the Income Tax Act, and the AO may start recovery proceedings under any one or main or more ways of them, and any sum imposed either by way of interest or fine, penalty, or any other sum payable under the provisions of this act may also be recoverable in the same manner as it is been provided in the recovery of areas of tax section 229. So here what happens whenever an assessee is in default is deemed to be in default in making a payment of tax, the tax recovery officer may draw under his uh, signature a certificate in the prescribed form specifying the amount of arrears that are due from the assessee and which shall proceed to recover from such assessee the amount specified in the certificate by one or more modes, which may be like attachment and sale of assessees movable or removable properties, or appointing a receiver to take over the charge or change of assessees movable and immovable property, issuing orders for the arrest of assessee. So these are all the different modes that may take place. And the other modes, when you look at here, the assessee is having in respect of any income under the head salaries, the tax recovery officer may approach the person paying salary to deduct arrears of tax. Yeah, like this, we have other like seizure and sale of movable property or recovered through the state government, recovery of tax in pursuance of agreements with foreign countries. recovery of penalties, fine, interest, and other sums. So, any sum imposed by way of interest, fine, penalty, or any other sum payable under the provisions of this Act, it shall be recoverable in the manner provided of the arrears or recovery of arrears of tax. So, sometimes if it is not like that, we will sue them by recovery by suit, that is, various modes of recovery are not exhaustive, and the central government has the right to enforce payment by any other method open to it under any other law relating to the recovery of debts due to the government. So, refund of tax. The question of refund arises when the tax paid by an assessee is more than the actual tax payable. Means if assessee is paying more than what actually he should pay, then the assessee will claim for the refund of excess amount. Once the AO is satisfied, that is assessing officer is satisfied about the excess payment by the assessee, he can allow the claim as refund. That is, under the following cases where they can claim refund, that is excess deduction of tax at resource, excess payment of advance tax, or excess payment of tax under self-assessment, or the liability of an assessee is reduced as a result of appeal or revision against order of the assessing office, that is AO, or grant of double taxation relief. In these cases, an assessee may claim for the refund. So now we talk about the appeals. The term appeal defines in the law dictionary as a proceedings taken to rectify an erroneous decision of a court by submitting the question to a higher court or court of appeal. It embraces all proceedings whereby a superior court is called upon to review, revise, affirm, reverse, or modify the decision of an inferior court. So here an appeal is a request for judicial examination of the decision given by the court, and this request is made to a higher court by the aggrieved party. And appellate authority, so we have an hierarchy, that is appellate hierarchy, and here appellate hierarchy with effect from 1st October 1998, the appeal can be made by made to commissioner, that is appeals, appellate tribunal, and reference to High Court and Supreme Court. See, the Act has provided a number of remedies which can be availed by the assessee against the order of assessment of the AO. So here the first appeal against such order lies at the Deputy Commissioner, that is called appeal. If the assessee or the AO feels dissatisfied against the order of Deputy Commissioner, either of them can go for appeal to the appellate tribunal. And when a reference to the High Court may be made either at the instance of the assessee or the Commissioner of Income Tax. And if in this case also an appeal against the orders of High Court may be filed either by the assessee or Commissioner of Income Tax before the Supreme Court, and the decision of the Supreme Court is final and there is no appeal against that. So this is the sequence how you just appeal whenever you have any grievances against the income tax or the Commissioner of Income Tax department. Let me share with you the topic. So the next topic we are going to cover is Introduction to Indirect Taxes. And in this, we try to understand nature of tax, objectives of taxation systems, taxable event and collection of taxes, direct versus indirect taxes, advantages and disadvantages of indirect taxes. Advantages and disadvantages of indirect taxes, administration of state, mode of passing an act by the legislature, introduction to constitution, taxation under the Constitution of India, and the entries relating to taxation, distribution of revenue, limitation of taxation powers. So this all we are going to try to understand under the introduction to indirect taxes. So when you talk taxation, this word is the government needs funds for various developmental activities, right from the whatever all the facilities that are provided by the government need some funds that are possible only by collecting it from the funds are obtained from various sources, and that sources or nothing from in the form of taxation. So here the tax is it taxation is tax is the word derived from the Latin word that is taxo, which means taxo is to estimate or appreciate or value. So here taxation is a new concept. It's not a new concept actually. Why? Because if you take from the history of our economic science, tax is the amount paid by person living with territorial limits of sovereign nation and is levied by on the entities resident in that particular area they used to collect it. And tax constitutes the revenue for the government. The state collects the taxes from the subjects and utilizes for the same for planned economic development. So in a nation like our country, it's much more important to develop our nation. And here tax is levied by the state by virtue of its sovereign powers. Generally, the constitution of any nation gives power to the state to levy and collect the taxes. And it should be noted that no state can levy and collect the taxes without the conferred power conferred by the constitution. So here the constitution is the source of power for any government or for any government as well. Constitution is supreme and all laws, statutes are subordinate to it. So what is the power to levy taxes in India? So here as per constitution, that is article 265, no tax shall be levied or collected except by authority of law. So only when the law says, then only they start collecting. And India is a federal state, not a unitary state. So laws are enacted by the Union Parliament as well as the state legislature. And here Article 246 of the Constitution of India through the seventh schedule spells out the allocation of subjects between the union and states. So that's the reason we have union list and state list, or we call it as concurrent list, which specify these will come under this state list and these will come under union list. So Article 246 of the Constitution has bifurcated the subject matter of laws made by Parliament and by the legislature of states. So it should be noted that Article 246 subsection 4 empowers the Parliament to make laws in respect of any matter or any part of the territory of India which is not included in state. Notwithstanding, the such matter is enumerated in the state list. So when we talk about the nature of tax, so here a tax is a compulsory. Tax is a compulsory exaction of money by public authorities for public purpose, enforceable by law, and it is not a payment for services rendered. It should be understood that taxes are not in nature of penalty. These are not a penalty. but rather it's a means of apportioning the cost of government among those who benefit from it. So tax is the amount paid under statutory obligation. If there is no statutory obligation, no one would have been be paying the tax. So the obligation is fixed by the charging section of the respective act. So generally, the charging section of the statute determines the taxable event, and the person who is liable to pay the tax when the said taxable events occurs. So here we have the essential characters of tax. If you look at that, that is to it is imposed under the statutory authority, and it is imposed for public purpose. It is not related to any special benefit received by the payer. There is no quid pro quo in taxation. It is a part of common burden. It is levied on the capacity to pay but not on the quantum of benefit received by the payer. It is collected by public authorities. The payment is enforceable by law, and there is no equity on taxing statutes. So what are the objectives of taxation system? So government of any country mobilizes resources through taxes to meet the public expenditure. So the basic objectives of any taxation system are mobilization resources for economic development, ensuring a rapid pace of economic development, and reduction in economic inequalities, reduction of regional disparities by inducing the enterprises to start new industries in backward states or districts, and directing the consumption pattern as per the priorities of the government, and to induce saving habit in the citizens, encouraging investment in priority sectors, helping capital formation, and protecting domestic industry entities from competition of foreign industries. Tax versus fee. So a tax is a compulsory charge or payment levied or imposed by public authority for public purpose, whereas fee is charged for rendering a particular service to the beneficiary. Next, tax versus penalty. Tax is the amount payable because of the charging section, whereas penalty is levied on the SSC for some deliberate violation or uh, not following the rules. In that case, there will be a penalty. Next, tax versus duty. Tax is normally used when the amount is paid directly, while duty is used when the amount is paid indirectly. Next is cess. Cess is tax imposed for specific purpose with reference to some goods. Therefore, it causes obligation on collecting agency to utilize the same only for the purpose for which it has been levied. So, cess normally we collect for the specific purpose or development of specific department or development of specific industry, that is, and that should be used only for the purpose for the development of the specific field or industry only. Next is direct taxes versus indirect taxes. So here, direct taxes and indirect taxes. Direct taxes are the direct taxes which are imposed on the per same person. The person who is earning the income, on the person only it been imposed, and the tax is borne by the assessee. It is not passed on to the anyone. The example, income tax, as is earning, he has to pay tax on that. Whereas indirect tax is tax where the incidence of the assessee, that is the impact on the consumer, the incidence has been transferred to some other person. The assessee passes on the tax to the consumer. Example, excise duty. Similarly, direct taxes, they are imposed on persons, whereas indirect taxes imposed on goods and services. Next, indirect taxes, amount of taxes determined directly on the basis of taxable income, that is wealth of the assessee. Whereas indirect taxes, it is imposed on amount of tax that is determined indirectly. And under direct taxes, tax collection is difficult, whereas indirect taxes, tax collection is relatively easier. Next, under direct taxes, not all the people are affected by direct taxes, but whereas indirect taxes, all the people without any exception bear indirect taxes. Even an auto driver who have an income more than the exempted limit should pay the excise duty if he purchases any toothpaste. That's what. From the day when we start morning with the brushing our teeth till we sleep with drinking the water in the glass, whatever the products we purchase, we use, irrespective of the income you are earning, everyone has to pay the indirect taxes. Whereas direct taxes, depending on the amount or the income what they are earning, on that they will pay the direct tax. Next is advantages and disadvantages of indirect taxes. Under this, we have advantage of indirect taxes or high revenue from indirect taxes and easy to administer and collect indirect taxes. Its tax evasion is less when we compare it with the because when you purchase any product, you have to pay the tax that we all know. So there is no so there is no chance of escaping or avoiding the indirect taxes. And channelize industrial growth. Here, the government can judicially use indirect taxes to develop in desirable areas and encouraging the while discouraging it in other undesirable areas. Control over wasteful expenditure. So, by imposing higher excise and customs duty, the government can reduce the consumption of unwanted goods, and also they try to reduce the wasteful expenditure on luxury items. In even psychological advantage to taxpayer. Why? Because it's psychologically very difficult for a person to pay some amount after once it comes to the hands of the person. That's what in income tax there will be very less people who will pay income tax. But whereas indirect tax is not at all possible because before you receive the product you need to pay the tax, then only you'll receive that product. Why? Because the price of any commodity or service is already inclusive of indirect taxes. So the consumer do not feel a direct pinch while paying the indirect taxes. So hence there will be very less resistance to the indirect taxes in much is much less when compared to the direct taxes. Disadvantages of indirect taxes. So it's regressive in nature. Why? Because they have taxes may be classified into proportional, progressive, regressive and digressive taxes, and it reduces the consumption of goods, protects the local industry, and smuggling may be encouraged. Administration of staff. So, as India is a democratic country, our ours is a government of the people, by the people, and for the people, as defined by the Abraham Lincoln. So, in democracy, people rule themselves through their elective representatives constituting the legislature. So it is the legislature that frames law of governance. The executive government implements these laws. In case of any doubt, the judiciary interprets the law. The press proclaims. The press proclaims candidly the public opinion. In political science, the legislature, the executive, the judiciary, and the press are referred to first, second, third, and fourth estate. These are the four recognized pillars of democracy. The Comptroller and Auditor General of India, the constitutional authority, is being recognized as fifth estate. So he is the watchdog for public funds. He ensures that intention of first estate in regard to collection of taxes and implementation of welfare schemes are properly carried out by the second estate. So it's a must have a brief of functioning of three important organs: legislative organ, administrative organ, and judicial organ. So, as we all know, that Parliament consists of President, Lok Sabha, and Rajya Sabha. So, but President of India is the head of the state, and Parliament makes law for governance of the country. It also sanctions budgetary expenditure of the government. Whereas when you talk about executive organ, this is the administrative part of the state where administration is looked after by the government, for which council of ministers is at its head. And the council of ministers is headed by the prime minister, and prime minister can head the administration till he enjoys the confidence of the parliament. So each minister is assigned a particular ministry, and government has to implement the law passed by the parliament. And the next one is judicial organ. And it is always been found in all countries that control and check over executive powers is essential. And in absence of such control, misuse of power is very much likely. Our constitution therefore provides independent judiciary with wide powers. And the highest court in India is Supreme Court. So law declared by the Supreme Court is the law of the land and is binding on all the subordinate courts, tribunals and executives. So just you can look at here the entries that are relating to the taxation, that is union list, that is list 1 of 7th schedule. So your entry number they are given 82 to 97, where they talk about the tax on income other than agriculture income, duties of customs including export duties, and duties of excise on tobacco and other manufactured or produced in India except alcoholic or liquor for human consumption, opium or Indian hemp and other narcotic drugs and narcotics, but including medicinal and toilet preparations containing alcohol or any substance included in subparagraph. So that will be considered. Even the purchase of goods other than newspaper or tax on consignment of goods, and also the tax now which is not mentioned either in those lists. So this all comes under the list 1 of union list of list 1 of 7th schedule. Next is list 2, list of the 7th schedule, where we talk about uh, tax on agricultural income, duties of excise on the following goods, and also tax on entry of goods into local area of consumption, use of sale and also thereon. And the last one is taxes on sale or purchase of goods other than newspapers and subject to provisions of entry 92 of union list. So this is about the taxation constitution, that's indirect tax. So the next topic is GST. So we discuss about the GST. What is pre-GST period, GST, and journey of GST, challenges, its advantages. And this all comes under block 5. Give me a second. So whether it was uniformity of taxation or consequent free interior trade or possession of the jewel in the crown at the root of prosperity of Britain is debatable, because nonetheless the words of father of modern economics on the benefits of uniformity of system of taxation cannot be taken too lightly. Why? Because before the implementation of goods and service tax, India's taxation system was having a various number of taxes like central, state, and local area taxes also. So by subsuming more than a score of taxes under GST, the road to a harmonized system of indirect taxes has been paved, making India an economic union, because the goods and service tax, that is GST, is an indirect tax which has replaced many indirect taxes in India. The goods and service tax was passed in the parliament on 29th March 2017, and it came into the effect on 1st July 2017. Goods and service tax law in India is a comprehensive, multi-stage, destination-based tax that is levied on every value addition. And in ordinary parlance, the goods and service tax is an indirect tax levied on the supply of goods and services. This law has replaced many indirect laws that previously existed in India. And GST is advocated as one indirect tax for the entire country. That is calling one nation, one tax. So before GST, what was the period, how it used to be? So that Article 265 to the Constitution of India proved that no tax shall be levied or collected except by the authority of law. So as per Article 246 of the Constitution, Parliament has exclusive power to make laws in respect of matters given in Union list, and state government has the exclusive jurisdiction to legislate on the matters containing the state list. So, in respect of the matters contained in concurrent list, both the central and state governments have concurrent power to legislate. And before the advent of GST, the most important sources of indirect tax revenue for the union were customs duty, that is interf 83 of union list, and central excise duty and service tax. So like this, we were having these many taxes before the GST has been started. So now let's understand what is GST. So under the GST regime, the tax is levied at every point of sale. In the case of intrastate sales, central GST and state GST are charged. Interstate sales are chargeable to integrated GST. So that is called, whenever you have sales within the state, you will pay CGST and SGST. When you have sales or purchase with the other state, then we will have IGST, that is integrated GST. So now let us try to understand the definition of goods and services of tax. That is, GST is comprehensive multi-stage destination based tax that is levied on every value addition. So what is multi-stage? There are there are some products which change the various on hands, and item goes to reach the customer. It will take at least 10 people or some many hands will go into that to reach the final product. So here GST, that is goods and services tax, is levied on each of these stages, which make it is a multi-stage tax. Let us take the example of manufacture of an ordinary item like chocolates. Here the manufacturer who makes chocolates buy the raw materials like cocoa powder, sugar and other materials. And the value of inputs increase when these ingredients are mixed and made into chocolates. So the manufacturer then sells the chocolates to warehousing agent who packs large quantities of chocolates and labels it. This is another addition of value, after which the warehouse sells it to the retailer. Now the retailer packages the chocolates in smaller quantities and invests in marketing of the chocolates, thus increasing its value. So GST is levied on these value additions, that is the monetary value added at each uh, each stage to achieve the final sale to the end customer. Here, what is happening? The retailer is packing the chocolates in smaller quantities and invest in the marketing of the chocolates. Thus, what is happening again? Its value is increasing. So here, GST is levied on these value additions. That is the monetary value added at each stage to achieve the final stage to the end sale end customer. Or GST is a definition-based tax. For example, goods manufactured in Telangana offered or sold to final customer in Andhra Pradesh. Since goods and services tax is levied on the points of consumption, so that the entire tax revenue will go to Telangana and Andhra Pradesh. So journey of GST in India. So here the Kelkar Task Force on Fiscal Responsibility and Budget Management recommended in 2005 for the introduction of comprehensive tax on all goods and services, replacing central level VAT and state level VAT. So it is recommended replacing all indirect taxes except the customs duty with value added tax on all goods and services with complete set off in all stages of making of product. You can see here how when the GST bill has been moved in the parliament and how it is got approved. So an announcement was made by the union's finance minister in budget 2007 and 8, where the effect of the GST that would be introduced with effect from April 1 and 2010. But at last it came into force on 1st July 2017. Why? Because in 2017 the GST bill was passed in the Lok Sabha and Rajya Sabha, and on 1st July 2017 the GST law came into force. And here the picture shows the then finance minister, and the headlines in the Hindu also: the day the GST came became a reality. At the stroke of midnight, India gets a good and simple tax. Challenges in designing GST. So it's origin based versus destination based taxation, rate structure and compensation, alcohol and petroleum products, and the advantages of GST. GST has mainly removed the cascading effect, that is on the sale of goods and services. And since the GST regime eliminates the tax, the cost of goods also decreases. And GST is also mainly technologically driven. All activities like registration, return filing, application for refund, and response to notice needs to be done online on the GST portal. This accelerates the processes. Precisely, the advantage of GST can be listed as below: removing the cascading tax effect, setting a higher threshold for registration, devising a composition scheme for small businesses, and simplifying the online procedure, thus ensuring the greater compliance, simplifying and regulating the defined treatment of electronic commerce, and improving the logistical efficiency, bringing the unorganized sector in the tax net, and regulating the such markets. So this is a brief introduction how the GST has been introduced and how the changes has been taken place. Now we move to the next topic. Just give me a second. To retrieve the chapter. In the meantime, I'll just revise the topics what we have done today. The 18 topic talks about the implications of GST. What the implications that have been taking place in the GST. In that, we try to what is the advantage, what is the current concurrent dual model of GST and advantage of the dual model GST and tax rates, e-way bill system, concept of supply and threshold exemption, zero rated supplies, cross utilization of ITC, and settlement of government accounts, modes of payment, refunds, tax collection at source, self assessment, recovery of arrears, concept of supply, threshold exemption, sub, subsumming of taxes, duties, etc., and also tax laws before GST, changes brought about by GST. So this all we try to understand in the implications of GST. So whenever you first we talk about concurrent dual model of GST, where India has adopted a dual GST model because of its unique federal nature. Why? Because under this model, it has happened that tax is levied concurrently by the center as well as the states as a common base, and that is supply of goods or services or both. Either it may be supply of goods or services or both it may be. And here the GST is levied by the central, would be called central GST, and levied by the state we call it as state GST, and when it is done would be called by union territory we call it as UT GST. And the IGST model that is conducted on the interstate supply as goods and services that should be supplied subject to integrated GST, that is IGST. And say the IGST model is a unique contribution of India in the field of VAT. So here the IGST model envisages that center would levy IGST, which would be CGST and SGST. Means if you are doing any purchase or sale within the state, we call it as uh, interstate supply, where you'll tax CGST and SGST, that is 9% on the goods, that is state as well as central is also 9%. For example, if you're having the transaction of purchasing and sale between two different states, then you will collect the integrated GST, that is IGST of 18%. So what is the advantages of dual model of GST? Here the major advantages of IGST model are maintenance of uninterrupted ITC chain over interstate transactions, or no upfront payment of tax or substantial blockage of funds for them, interstate supplier or recipient, and also no refund claim in exporting state as ITC is used up while paying the tax, or self-monitoring model, or model takes business to business as well as business to consumer transaction into account. So here the tax rates, there are four tax rates that are different. It changes, goes on changes. This is about 2019, where that four rates were 5%, 12%, 18%, and 28%. which have been adopted, and besides some goods and services are exempt also. Next is e-way bill system. Here the introduction of e-way bill, that is electronic way bill, is a monumental shift from the earlier departmental policing model to a self-declaration model. It envisages one e-way bill for movement of the goods throughout the country. So one bill is enough to move the total country. There is no need of stopping or anything doing that. And therefore it ensures the hassle-free movement for transporters throughout the country. So the e-way bill system has been introduced nationwide for all interstate movement of goods with the effect from 1st April 2018. And here GST regime also brings a centralized system of waybills by the introduction of e-way bills. And the system was launched on 1st April 2018 for interstate movement. And here the concept of supply comes into picture. Whenever we talk about the concept of supply, GST would be applicable on supply of goods or services as against the present concept of tax, and on manufacture of goods or on sale of goods or on provision of services. It includes all sorts of activities like manufacture, sale, barter exchange, transfer, etc. And it also includes supplies made without consideration when such supplies are made in certain specified situations only. And here we have some threshold exemptions with regard to the GST, that is a common threshold exemption would be applied to both GST and SGST. Why? Because taxpayers with an annual amount of 20 lakhs, that is 10 lakhs for special category states, and as I specified that Article 279A of the Constitution would exempt from GST. So here the GST has been amended, shall be effective from a date to be notified in the future. So the benefit of here threshold exemption is not available in the interstate supplies of goods. So here consumption scheme comes into picture there, where an optimal consumption scheme, that is to pay tax at a flat rate on total turnover without any credits. And here it is also available to small taxpayers or manufacturers other than the specified category of manufacturers and service providers having a annual turnover of rupees 1 crore. Next is zero rated supplies. When you talk about zero rated supplies, the export of goods and services are zero rated because supplies to CEZ, that is special economic zones, developed, and CEZ units are also zero rated. CEZ units are also zero rated, and the benefit of zero rating can be taken either with payment or integrated, etc. So here, without payment of integrated tax under bond or letter of undertaking is also accept, that comes under the zero rated supplies. The next one is cross utilization of ITC. So here IGST credit can be used for payment of all taxes, and here CGST and CGST credit can be used only for paying CGST and IGST, whereas SGST credit can be used only for paying SGST and IGST. So here the credit would be permitted to be utilized in the following manner: that ITC of CGST allowed for payment of both CGST as well as IGST, but not for the SGST. Next, ITC of SGST allowed for payment of SGST and IGST. And also ITC of UTGST allowed for payment of UTGST and IGST in that manner or in that order, whereas ITC of IGST allowed for payment of IGST, CGST, SGST or UTGST in that order. So depending on that, it has to be under the, you should know and you should understand in the perspective of the supplier as well as the purchaser. Because they will have there will be some exemption for TDS and refunds. A refund of tax to be bought by taxpayer or by any other person who has borne the incidence of tax that is it. So here refunds takes place. Refunds of tax to be bought by taxpayer or by any other person who has borne the incidence of tax within 2 years from the relevant date. So the refund of unutilized ITC also available in zero rated supplies and inverted tax structure. So this is about, and the next is mode of payment, recover of arrears. So arrears of tax to be recovered by using various modes, including detaining and sale of goods, uh, and also movable and immovable property of defaulting with taxable person. And after that, even we discussed the arrears of recovery of arrears, appellate tribunal, because goods and services tax, appellate tribunal would be constituted by the central government for hearing appeals against the orders passed by the appellate authority or the revisional authority. States would adopt the provisions relating to tribunal in the respective SGST Act. And there is an advanced ruling authority also, and subsumming of taxes and duties or etc. That is going by the foregoing, recall that there are three taxable taxes applicable under the system, that is CGST, SGST and IGST. So CGST means Central Goods and Service Tax, which is collected by the central government on interstate or intrastate sales. That is the transaction arising and ending within a jurisdiction of a state, that is within the state, or example within the state of Telangana. SGST also within the state of Telangana, where the two will be collected. But IGST having a transaction or purchase or sale between the two states, example Telangana and Karnataka. And the remaining we continue it in the next class.